Hello, everyone. The 3rd of November. Well, we're on the home stretch now. Tomorrow's a really big day for the world, in my opinion. The US election. I've been following it avidly. Hope to good God that it goes the right way. And what I mean by that is, well, I know you're not supposed to talk politics when you're discussing business, but I really want Kamala to win, if I'm pronouncing that name properly. Um, I think Iran's just a nut job, if the truth be told. But anyway, we'll keep politics to one side for the moment. But there will be more local politics that will have a more relevant issue on, well, the property market here in Ireland. I think this week there's going to be an election called in Ireland, which, unlike the US, will have it all done and dusted probably within, well, I think by the end of November. So I think they have a year lead up to their election. We'll have 3 weeks and we'll have it all done and dusted. What I do believe one of the big issues in the election in Ireland is going to be housing. Um, there was a report that came out during the month. House prices in across Ireland in the last year have gone up by 10%. Um, the increase in the price was basically on the back of interest rates that stopped going up. That kind of slowed the market last year, and the prices were kind of more on a stable level. But it just really highlights the huge gap that I've been talking about between supply and demand. And I will imagine all sorts of promises will be made by the different parties around properties, and trying to help with the increasing the supply in effect. So watch this space. I'll obviously give you my opinion and thoughts, and we'll wait. We'll probably have the result of both elections at the start of December. So fingers crossed on both. Um, anyway, what else happened during the month on the mortgage side? Well, the European Central Bank reduced their rates again. So that's, in a way, I say this is good news, but it's kind of guarded good news on the basis that obviously it's going to make it easier to repay, but um, the banks will now lend more money, which, when there's a shortage in supply, may just increase the prices. So I'd say it's guarded. It's good news for all existing mortgage holders who are maybe on a variable rate. For people who are looking to buy a home, in theory, the same mortgage will cost them less, but maybe they're going to need to borrow more if the prices continue to rise. So I suppose just cautiously optimistic. Some of the banks as yet haven't passed on the rate increases, but I do anticipate that's going to happen in the near future because one or two have already done so. So competition will dictate that they follow suit. Um, the last thing to bring to your attention, and it's kind of an interesting development. There was a new bank, which is great for the consumer, with more competition, called Nua. We literally just secured an agency with them there last week, and we will be open for business with them from basically as of today, in effect. So where they're different, and this is where their niche market is. You probably noticed me in the past talking about getting your bank accounts ready and making sure you can prove to the bank that you are able to meet your mortgage repayments. Nua have taken a view, very much a sort of a view on, well, if you get yourself ready for 6 months, right, that doesn't mean you won't go back to your own way. They just take a view, if you're earning a certain amount of money, they will lend you X amount. They'll take all the factors. They don't need you to demonstrate that you can do this. They work on the basis that once you get a mortgage, with the level of income you have, you will fall in line, shall we say, or you will make sure that your mortgage repayments are met, assuming that there's no credit issues in the past, because obviously that would go against you. So it's a huge development in terms of, if you're looking to get yourself on the market quicker, and like normally planning to get yourself ready is the cornerstone of what I preach in terms of getting yourself educated. But if you want to do it quickly, this is definitely going to be an option you can look at. Their rates will be slightly higher, but they will lend to a higher. Some of them, if you're paying into a pension, will go up to 75, even I don't know, I'm not a big fan of that, paying a mortgage to that age, but it certainly is an option if you, in the short term, wanted to keep your repayments lower. So, obviously, I'm a big believer in more choice for the consumer. The more choice there is, well, the better it is, the easier it will be to, um, I suppose, get a home or get a mortgage. So, if that's something that appeals to you in terms of being able to move forward with immediate effect, well, it's something to get in touch, and we'll be able to let you know where you stand on that. But our role here will be to educate you in terms of, well, if you do X, if you want to do it now and you want to basically work on what you can get right now, well, this will now be an option, rather than me saying to you, go away for 3 6 months to get your bank accounts looking perfect. There is a way of maintaining something and moving forward at this point. So, I've covered a lot. There's a lot going on: elections, interest rates, and new banks. So, I'm guessing we are hoping really is to help everyone get ready for 2025 at this point. So you know where I am. There'll be a link to my calendar at the bottom of this video. So you want to get in touch, and look forward to talking to you soon. Thanks.